Hello friends, welcome back to a new lecture. From this lecture we will start with two candlestick patterns. So in next few lectures you will learn the following two candlestick patterns. First one is the engulfing patterns, that is bullish engulfing and the bearish engulfing patterns. This we will cover in this lecture. After this we will cover the dark cloud and the piercing signal. Then we will learn the harami patterns, that is the bearish and bullish harami pattern. And finally we will learn the bullish and bearish railway track patterns. Now friends, most books or instructors teach patterns up to number 3, but I have found railway track pattern very effective and it's included in one of my favorite two candlestick patterns. In this lecture we will learn the engulfing patterns. So let's start with bullish engulfing pattern. Friends, the bullish engulfing is a two candlestick bullish reversal pattern. So there must be a preceding downtrend when this pattern occurs. You can easily identify this pattern with two opposite colored real bodies. In case of bullish engulfing, the second day's green real body must totally engulf the first day's real red body. That is, the green candle open lowers and closes higher than the red candle. If you are confused with the term engulfing, then engulfing basically means overlapping. Please note that you should compare the bodies only and not the full range of candle. Let's understand the psychology behind formation and reversal after bullish engulfing pattern. Friends, suppose a stock or currency pair is in continuous downtrend. Now this creates panic in the investors and they start exiting at lower levels. So this creates the long red candle on the first day. Now because of this huge sell-off, next day the stock opens with a gap down opening, but now the smart money pours in since the stock looks attractive at these lower levels. So the bulls overtake bears comprehensively and stock finally closes above the previous day's red candle, thus creating green engulfing candle. The bulls in fact have now fully overridden the bears. The stock is thus ready for a reversal. Friends, the bullish engulfing pattern is the most bullish of all bullish reversal patterns. This is because the counter attack shown by the bulls on the second day completely nullifies the downward pressure made by the bears on the first day by closing the second day higher than the open of first day. Let's now look at the trading setup and see how to apply a tree setup here. Now the trend must be down in case of bullish engulfing pattern. Then second is region of interest. Now friends, since this is a bullish reversal pattern, so it should ideally form around support levels. Now this can be a trend line or horizontal support level, a moving average or even Fibonacci levels. Then the RSI should be in oversold levels. Finally, the entry level can be open of next candle, that is day 3 candle if there is a gap up opening. Else wait for next day's candle, that is day 3 candle, to close above the green candle of the pattern. Only then take the entry. Finally, you can take your target at previous resistance or previous swing high. If the previous resistance or swing high is much higher and you don't expect that to cross, then you can even exit at 50% of that level. Or traders can even use 1:2 risk to reward ratio. As said, take your targets rationally, seeing the overall context of the market. Let's see a practical example. This is the chart of Bank Nifty and please note this downtrend here. Notice this downtrend is followed by the formation of bullish engulfing pattern as shown in this yellow box. I will just zoom out this part and now you can see this part clearly. Please note this first red candle is a small body candle and next green candle has a gap down opening and completely engulfs the red candle body, thereby making a valid bullish engulfing pattern. Let's check if this is formed at a region of interest. Let me zoom out to have a broader picture. Now friends, this is the location of our bullish engulfing pattern. Now to find the region of interest, I will just draw a region around this pattern and take it backwards. Now you can notice this level acted as a strong resistance level here. So after breakout at this point, this level must act as a strong support level. Hope you remember this important concept with respect to support and resistances. So condition 2 of our trading setup is fulfilled here. Let's zoom in and see other conditions as well. Next we will check the RSI, and as you can see the RSI is just touching the oversold region. Finally we will wait for the next candle. As you can see the next candle closes above the green candle of the pattern, which confirms our entry here. Our target will be this swing high, and this target got hit here. As you will notice, this was a trade which required patience. But obviously this is one of the most important quality every trader must have. So friends, hope the trading setup is clear to you. Let's move on to the second engulfing pattern, that is bearish engulfing pattern. Friends, the bearish engulfing is a 2-day bearish reversal pattern. So there must be a preceding uptrend before the formation of this pattern. You can easily identify it with two opposite colored real bodies. In case of bearish engulfing, the second day's red real body must totally engulf the first day's green real body. That is, the red candle opens higher and closes lower than the green candle. Please note the wicks are not important here, but shorter the better. Let's understand the psychology behind formation and reversal after bearish engulfing pattern. Now friends, just imagine the stock is in continuous uptrend. There is exuberance in the market which results in formation of green candle, implying the complete control of the bulls. Due to this continuing uptrend, the market opens above the high of the green candle next day, indicating the complete grip of bullish forces. But now the smart money or big players enter the market and they start booking their profits or enter fresh short trades, seeing the overheat in markets. Finally, the bulls lose momentum, the bears take charge and sends the price down during the session, and eventually manages to close below the low of green candle. Finally, the bulls are in full control of the market and market is set to fall. Let's understand the trading setup. Now the trend must be up in case of bearish engulfing. Then next is region of interest. Now since this is a bearish reversal pattern, so this should form around resistance levels. Now this can be a trend line or horizontal resistance level or even a moving average. Now the RSI should be in overbought levels. Then the entry level can be opening of next candle, that is day 3 candle, if it's a gap down opening. Else wait for next day's candle, that is day 3 candle, to close below the red candle of the pattern. Only then take the entry. As said earlier, always take your confirmations and never trade candlesticks in isolation. Now friends, finally you can take your target at previous support or previous swing low. If the previous support or swing low is much lower and you don't expect that to cross, then you can even exit at 50% of that level. You can also exit with 1:2 risk to reward ratio. Let's see the application of the strategy with the help of this chart. This is the chart of US stock Apple, and as you can see the trend is up here. After reaching this resistance level, the price retraced down, but again the uptrend continued. As you can see, this is followed by the formation of a bearish engulfing pattern, and the stock is again testing this area of resistance. Now friends, please notice this region has previously acted as a strong resistance level. So now also the probability is high that this level will act as a strong resistance. Let's see if the pattern formed is valid bearish engulfing or not. As you can see, the first candle is a green candle which is completely engulfed by the red candle body. The red candle had a gap of opening and closed below the previous green candle, thereby making a perfect bearish engulfing pattern. Next, let's check the position of RSI. As you can see, the RSI is just touching the overbought region. But seeing the price action of the chart and strong rejection previously, we should not miss this trade. Finally, our entry will depend upon the next candle after the pattern. Now the next candle was a bearish candle that closed below the pattern. Thus we will go ahead with the trade around this level. Our target will be this previous swing low which got hit around this level. So friends, hope the example is clear to you. So with this I wind up this lecture. This is all about engulfing patterns. In the next lecture, we will learn the dark cloud and the piercing line patterns.